Okay, you guys, we're now going to look at exercise 4-11 on page 210. Now here we're calculating comprehensive income. Now we mentioned that in an earlier video. It's just a further measure of a company's income for the year or loss. The starting point in calculating comprehensive income is net income. We have two main items that will cause that are included in comprehensive income but not included in net income. Let me say that again. We have two main items that are included in comprehensive income that are not a part of net income. So our starting point in calculating comprehensive income is net income for that year. Okay, so here's our formula. And this would appear on the income statement below net income, but only for companies that had these other comprehensive income items. Okay, so we'd start with net income and we'd add or deduct. Add gains, of course, deduct losses. The first category is unrealized gains or losses on available for sale securities. We're going to show all these net of income taxes, and we'll talk about that in a second. Unrealized gains or losses on available for sale securities. Securities would be stocks or bonds, and ones that are available for sale are ones that we've bought for speculative purposes that we're actively trying to sell. The unrealized portion means we haven't sold them yet. So let's say we buy Coca-Cola buys some stock in Walmart sometime during the year, and they bought it because they think Walmart stock is a good buy at the time. And at the end of the year, it's gone from $60,000 basis to an $80,000 basis. So it's gone up in value by $20,000. But if we haven't sold it by the balance sheet date and the financial statement date, if we haven't sold it, then that gain is said to be unrealized, an unrealized $20,000 gain. Well, we wasn't included in net income until the securities were actually sold and realized, so to speak. But it's a part of comprehensive income, even though we haven't sold them yet. We'll talk about in a later chapter. We have to, and it might even be in the second part of the course, that at the end of the year, certain securities have to be marked up or down to their market value on the balance sheet, and these unrealized gains or losses are shown on the income statement. They're not a part of net income, but they are a part of comprehensive income. Now, you guys, that's a break from normal accounting rules. Note, we normally put assets on the books at their cost. Here, we're marking some certain marketable securities up or down to their market value at the end of the year. And that would be shown on the balance sheet in a certain category. But on the income statement, it's shown below net income. It's not a part of that number, but it is a part of comprehensive income. The other item that's fairly common would be gains or losses from foreign currency translation. We'd also show that net of income tax, which I'm about to talk about. This would be gains or losses, it's probably fairly self-explanatory, that arise from doing business in another country and using their currency and then bringing that back into U.S. dollars and having a gain or loss result from that. What they mean by showing them net of income tax, well, you guys, in calculating net income, we deduct income tax expense. So any gains or losses shown after that would have to be shown net of income taxes. Alright, hope that makes sense. Any ones listed on the income statement either above net income or below it have to be shown net of income taxes if they show up after income tax expense. Okay, so we'll come back to our Excel spreadsheet to do some calculations in a second, but let's look at the problem itself. Again, that's exercise 411. and we'll read through it here. The M Consulting Group reported net income of $1,354,000 for its fiscal year ended December 31st, 2016. Okay, so there's our starting point. We'll do the heading. Sometimes I like reading a portion of the problem, take the information that I've already been given, and start the problem. So we'll first do the heading, like I said, Masad Consulting Group. I may have said that incorrectly. Chances are I did. And this is statement of comprehensive income. And then we would date it for the year ended December 31, 2016. Remember, our starting point on our formula over here was net income, so that's what we'll pick up first. Alright, and net income was $1,354,000. Alright, let's read further. In addition, during the year, the company experienced a foreign currency translation adjustment gain of $240,000 and had unrealized losses on investment securities of $80,000. The company's effective tax rate on all items affecting comprehensive income is 30%. Each component of other comprehensive income is displayed net of taxes. Okay, so let's start with that gain on foreign currency translation. Well, let's calculate the after-tax gain. So let's come back over here. Our after-tax gain on okay, so here we go. So center these, I guess. Alright, so our gain itself was $240,000. Okay, the tax rate is 30%. That's how much the government's going to get. It's 30%. So the part we're left with would be 70%. So we'll say 240,000 times 0.7. It gives us $168,000. Let's format these. There we go. I wanted the comma. Sorry. The main reason I did it. Okay. Sorry. Alright, so our after-tax gain is 168. Now, I hope that makes sense. You could also have said 240,000 times 0.3. That would have given you the amount of tax, and then you could have subtracted that from the 240,000. Either way, you'll get the same thing. The other way would look like this. It would be the total gain, 240,000, minus 240,000 times 0.3. I'm sure this is just overkill for you guys. So either way, you get 168,000. That's our after-tax gain on the foreign currency item. And we'll show it like this. We'll first list the heading, other comprehensive income or loss, with a colon. Then we'll list foreign currency translation gain, net of tax, 168,000. Okay, we also want to calculate the after-tax unrealized losses on investment securities. The loss was 80,000. You guys, with the losses, we received tax benefit. Here on the gain, there was taxes that we'd have to pay. we're not paying them now. We wouldn't pay the unrealized until later. But anyway, there's taxes we'd have to pay on a gain. There's some tax benefit for a loss. So when we're calculating this one, let's say what the loss was, $80,000 times, well, what's the amount of the loss after the tax benefit? Our tax benefit would be 30%. Excuse me, our tax benefit would be 30%. So the amount of the loss after the tax benefit would be 70%. 56,000. Sorry, I kind of bungled that. What we're saying here, there's tax benefit when you have a loss. Okay, well, our tax rate on the benefit is 30%. The amount of the loss after the benefit, see, the benefit minimizes the loss. So the amount of the loss after the benefit would be 80,000 times 0.7, or 56,000. You could also say it like this: 56,000, or excuse me, 80,000 times 0.3. Let's put our 80,000 up here first, though. We'll see 80,000 minus 80,000 times 0.3. You're going to get 56,000 either way. Alright, so we come back over here. Our unrealized loss on investment securities net of tax is only a $56,000 loss. Then we're going to net these two together. 168,000 minus the 56,000 gives us total other comprehensive income of 112,000 when we net those two together. Now it's a positive number, so we'll add it to net income, and that gives us comprehensive income of 1,466,000. Just a further measure of the company's income. These items are not to be included in net income, but they are part of this further information that we give the readers, comprehensive income. Alright guys, I don't think you'll have a problem with the exercise 411 on the Connect site now. If you have any questions, please be in touch with me. Thank you.